This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December the 9th, 2011. Our time is 8:40 Mountain, 10:40 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, the shows are archived on Harold's website, HESradio.com and rarecoloreddiamonds.com. As we start this show, the EU leaders met over in Europe. What the market was looking for is something big, and they really got a small measure. In fact, Angela Merkel, the German chancellor, said, "The German government has made it clear that the European crisis will not be solved in one fell swoop. It's a process, and this process will take years." And they started that process today. But, Harold, that means the uncertainty in the markets is going to continue for many, many years.
You better believe it, Randy. Again, to say that the markets are choppy is an understatement because, again, you've got three major factors going on, and they're all affecting the markets, and it's extremely confusing for most people. Most things, what we really need to understand, again, is things need to improve in Europe in order for the markets to go forward. But at this particular point, the market is trading in a range. Gold is trading at $17.20. It's up $6 on the day so far. But all in all, on Thursday, the market was up actually to $17.50. And there was some resistance at that level, but the gold market is trading in a range and is looking for direction from the U.S. dollar primarily. The silver market is also trading in a range. We're trading right now at about $32.50 in that area, but again, silver and gold tend to move in tandem, and again, with the markets so uncertain in Europe and in the U.S., that's what's causing the choppiness in the market. The oil market's trading right at around the $100 level. We're very, very bullish on oil. We think that oil next year could be in the $200 range or higher, and again, we'll certainly discuss that as the show goes on. And the U.S. dollar is trading right now in the 78 to 79 cent area, which is another reason why the market is so choppy. The danger areas start to happen in the U.S. dollar above the 80 cent level. We're at 78.50 right now, so again, we're watching the U.S. dollar very, very closely. The heavy danger in the market is if the U.S. dollar gets back up to 86 cents. And the only reason that the U.S. dollar has any strength at this point at all is primarily because the euro is so weak and the problems in Europe. So once the European situation starts to straighten itself out, you'll see the U.S. dollar start to pull back again, and that's when you'll start to see the price of gold start to get up. And again, we're only $120 away from the all-time highs of $1,900, and that could happen in a week in gold with the right situations. So again, we're still very, very bullish on the gold market, the silver market, the oil market, and we're extremely bearish on the U.S. dollar. However, with things so uncertain in Europe and the euro falling from 160 to 130, 132 in that area, that's why you're not seeing the rally in gold at this point. These markets only seem to be fun for us when gold and silver are running, but again, we're at such a dangerous time in the world economy that we really need to pay attention to three major areas of concern. Obviously, number one is Europe. They're not able to resolve their financial issues, and there's so much money outstanding. There is not enough money that could be printed to bail these six countries out of trouble. So basically, the situation is so confusing and so dangerous that what I believe is going to happen, and I believe the only solution, which is a short-term solution, is that they will start to print money substantially in Europe just to try to make their bills. And we all know that printing of dollars and euros is extremely inflationary, and again, that just adds to the bullishness in the hard asset markets with gold and silver. The other major area of concern is obviously the United States. Things are not getting better in the U.S., and Canada being a trading partner and neighbors, everything is interrelated. The thing that's of biggest concern, in my opinion, is the debt, obviously the job situation, the crippled real estate market, but the banks are all interrelated. And if the banks in Europe start to get into huge trouble, they're interrelated with other banks and these derivative markets, which could wreak havoc on the U.S. banking system one more time. And it's so fragile at this time that it could collapse. And again, that's obviously a major area of concern. You've got Europe and the U.S. as two areas in the world that are having heavy debt problems, and I don't think that they can get out of it any other way but printing and printing and printing. And we all know that, like any other commodity, when there's an overabundance of oil and the supplies are high and the demand is low, the prices go down. It's the same thing with food and any other commodity. When there's more of it around than the demand demands, then the prices will drop. It's the same thing with currencies. When they're printing and printing and printing U.S. dollars to try to pay their debts, it makes the U.S. dollar worth less and less. The only thing that is supporting the U.S. dollar at this particular point is the weakness of the euro, because again, the U.S. dollar trades against a basket of currencies, and one of those is the euro. The big situation that we really need to be concerned about, which is also extremely inflationary, is the situation that's happening in the Middle East. It's a hotbed, and Iran is the major situation. We saw last week what happened with Britain and Iran, and there's major troubles there. In actual fact, the U.S. is leading a coalition basically to bring heavy sanctions against Iran. And we know how Iran reacts to these sanctions, and it's not only in the banking sector, but it's also in the oil sector. And basically, when you cut off Iran's ability to make money through oil, they get really upset with that. And this is not a country that you really want to get into a heavy war with, because again, we all know what happens in the Middle East. And Iran is very, very wealthy, and they've got the support of China, and they've got the support of Russia. This is why this is such a frightening situation. So the sanctions that they're bringing against Iran at this point, they better be very, very careful, because we know from the past that all Iran has to do is cut off the Strait of Hormuz. They're strategically located right at the strait. 40% of the oil tankers go through the Strait of Hormuz into the Persian Gulf, and I think what will happen is that if Iran does do this, it will lead the United States and Britain and other countries like that to bring their heavy warships into the Persian Gulf. And again, I'm concerned, and I'm giving it a 75% chance in 2012 that we're going to see a war in the Middle East. It's not only Iran that has problems and is causing problems. You've also got Syria and Egypt and Saudi Arabia. All of them are hotbeds at this particular point. The situation with Israel is that most people think that Israel is going to go in and try to blow up these nuclear reactors and nuclear plants and all that, and I believe it's going to be more of these clandestine type of attacks where you've got small military groups from Israel and the U.S. and other countries going in and doing the job that needs to be done. I doubt that at the onset that we're going to see Israel go in and attack Iran. I think it's going to be more of these small little independent attacks and going in there and getting the job done. But again, Iran is not going to stand for this, and the price of oil could easily hit $200 going into 2012. I give that about a 75% chance of happening, and again, it'll derail any type of recovery that's trying to happen in the U.S. and in Europe. So $200 oil prices, we may seem, for Canada is bullish, but it will definitely hurt any type of recovery. And don't forget, if it does escalate to see $250 and $300 oil is not out of the question. All of the scenarios that I pointed out at this particular point, the European situation printing money, the U.S. Situation printing money, and the tremendous oil moves that are coming in the Middle East is all tremendously inflationary, which is the other reason why you need to be in the hard asset market, because they're the only assets that will actually profit by what's happening with inflation. And with inflation, it could be so severe. I'm talking inflation like we probably have never seen in our lives before, with $200 or $300 oil, food prices, and weak currencies all over the place. It's a very, very dangerous time, and it is not the time to be in paper assets of any type. Bonds are not good, and stocks are not good. You don't buy mutual funds on U.S. companies when the U.S. is on the verge of bankruptcy. It's one of the most dangerous things that you could do. At the seminar that we did in Edmonton, and there is a DVD available by next week, we're just cleaning it up, we talked about how severe the situation is, and again, what we really need to do to go forward. And part of it, for the uncertainty of what's happening in the world markets right now, is to keep, a major part of your money in cash so you don't lose it, and to have the rest of your money sitting in hard assets like gold and diamonds, because there is no doubt that those are the areas that will profit the greatest, and you don't want to just be in a what is termed as a diversified market, because a diversified market at this point is not going to help you. If you're sitting in 50% stocks a little bit of cash and some in gold and diamonds type of thing, if you're into that, the fact is that's not going to solve what the problem is. The biggest problem is going to come from inflation and weak currencies. So basically, when inflation really starts to climb, and it's not only going to happen, it's happening as we speak. In China, they've got 8 to 9% inflation already, and they've got almost the same in India. So it's got to happen worldwide. And it basically means that when your income stays the same, but basically your cost of living goes up substantially, that's inflation. And if you don't have investments that will increase in value as inflation starts to climb, then you're going to go backwards. And basically, that's not what we want to see happen. So primarily, when the price of oil goes up and you have to go to the gas station to fill up your gas tank and it costs you double what it is right now, that's inflation. And you've got to have additional money in order for that to happen. It shouldn't be that if inflation's moving up that we're going to cut out other parts of our life. All we need to do is be intelligent about this, not act on emotion, but act on logic. And basically, we need to go back in history and learn what happened the last time we were in this situation in order to have enough information to go forward. So basically, what I see with all these world problems happening, as confusing as everything is, let's just simplify it. Basically, Europe is in gigantic financial trouble, and the only way they're going to get out of it is to print money. And if they don't do that, you're going to find that all of the countries that are in trouble, Greece and Italy and Spain and Portugal and now France and soon to be Germany, are all going to be in financial straits, and they're going to go back to their old currencies at a greatly deflated rate. So basically, that's one major situation, which is extremely inflationary. The other situation in the U.S. is almost the same thing. The U.S. economy is in shambles. There's no way that the U.S. economy can recover if the real estate market doesn't recover and if there's no jobs. So basically, don't be fooled by the job numbers that come out during December, because most of it is part-time for Christmas. After that, everybody gets let go and the situation goes back to normal. So basically, everything that's happening in the U.S. with debt, jobs, crippled real estate market is extremely inflationary. And then don't forget, in March of 2012 is more than likely when the QE3, quantitative easing 3, is going to come out, and that's extremely inflationary because the Fed is going to print about $800 billion to $1 trillion that we know of in order to try to restart the U.S. economy. That's one of the most inflationary scenarios that you could ever have, and obviously $200 to $300 oil is the other situation. With currencies crumbling, with countries in Europe having possibly to go back to their old currencies at greatly deflated rates, it's going to be a severe situation that will bring on massive inflation that will basically be in the double digits. It would not surprise me to see in year 3, 4, and 5 back to 15 to 20% interest rates in the United States. They're going to have to reinflate the economy at some point. There's very few investments that will do well during these times. We're saying to be in cash and keep a decent amount of cash available, and the reason we're saying that is because of all these dangers out there, and even though you won't be making money on cash, you won't be losing it, and you need to have some of that available. Gold, there's no doubt in my mind that gold will remain choppy, but going into the first quarter of next year, we could see a massive rally in gold as QE3 is coming, and we could literally see gold go and trade between $2,000 and $2,500, and right now we're trading at about $1,730, so we are looking for a sizable move in gold in next year. Now, again, it's going to happen. I think the biggest moves are going to come after March when they do QE3. But again, as these currencies continue to fall and as the U.S. dollar falls, so will gold. And I think that we are going to see choppy markets in the currencies till they work things out in Europe. But once the U.S. dollar starts to fall again, you're going to see a massive move coming back in gold, and this next move is going to be big. Same thing for silver. We see the potential, even though silver's at $32, we see the potential of silver doubling next year. It's very feasible that we could be trading at $60 to $65 silver. So obviously $32 silver at this point is a tremendous buy. But again, there is downside potential still in gold and silver, so do not leverage your positions because it's dangerous when you do that. You want to own the actual paid-for physical metal because basically you want to be able to survive the peaks and valleys of the market. And if the U.S. dollar breaks above 80 cents, that's a danger area for gold. If it breaks above 86 cents, it's a danger area for gold. And again, the only reason that the U.S. dollar is somewhat strong at this point is because the euro is so weak. The other situation, again, we're going to talk about in the latter half of the show is diamonds. With all these countries going under and currencies changing so rapidly, you need investments that can be sold in other currencies and that, again, are not traded on the actual markets, like commodities and stocks. And diamonds is that type of investment. We're going to talk about that in the second half of the show. But basically, that's it. As confusing and dangerous as things are, we need to be a little bit more conservative. You need to be out of the assets that you're going to lose your money. And again, if you're in mutual funds, your financial advisor will tell you, well, you're in bank stocks, you're in insurance stocks, you're in commodities, you're in this and that. Some are going to make money, some are going to lose money. That's not what we're trying to accomplish here. We're trying to protect what we have, and you need investments that are going to go up in value as inflation goes up. And again, I don't see any way that we're not going to have massive inflation going forward, going into the next 2 to 3 years. So, again, let's take advantage of these markets as we sit, because we do have opportunities to do right. And, again, 90% of the money is made by 10% of the people. All Randy and I care about is that the listeners to this radio show do the smart thing, and the smart thing is to get out of your risky paper investments and get something into hard assets like gold, silver, and diamonds if you're going to survive the next 5 years.
The company that Harold recommends when it comes to investing in precious metals is Worldwide Precious Metals, a great Canadian company in business for over 10 years out of Vancouver. They're the only company that Harold recommends. The telephone number to connect with them is 1-866-623-2002, 1-866-623-2002, the website wwpmc.com. If you'd like to receive our free weekly newsletter, they'll be happy to send it out to you via email. We have our charts of the week, quotes and quick hits, information on diamonds, gold, silver, quantitative easing, the sovereign debt crisis, the U.S. debt and deficit problem, jobs in the United States, interest rates, the stock market, MF Global. That saga continued this week. John Corzine doesn't know where the money is. Unbelievable. Also, real estate and the geopolitical section is a must-read in our newsletter. Get the newsletter. They'll be happy to send it out via email free of charge every week from Worldwide. 1-866-623-2002, wwpmc.com. And they actually, to give you a bit of an incentive to start your own precious metals investment account before the end of the year, they have lowered their costs. It usually takes 5%. A buy commission is actually reduced to 2% for the rest of this year. They believe silver is on sale. They want you to start your own precious metals investment account today. As an incentive, they have reduced the commission, and this is for a limited time from now until the end of the year. Get in touch with them. As I was saying in the past, back 10 years ago, we were the only ones on the radio talking about investing in precious metals. As the bull market has progressed, a lot more people out there who are talking about investing in precious metals, many more ways to get involved in this market, but give Worldwide the opportunity to earn your business. Give them a call, 1-866-623-2002. Two stories that really caught my attention. They are in the newsletter. Portugal rated pension funds to meet their deficit target. Portugal rated, and this is in euros now, 5.6 billion of pension fund assets in a controversial scramble to meet its deficit targets. The cabinet agreed to transfer the assets from 4 of Portugal's biggest banks to the state balance sheet. So they went in there and basically they have pulled an MF Global. Also, anxious Greeks are emptying their bank accounts. Many Greeks are draining their savings accounts because they are out of work, facing raising the taxes. Obviously, politicians have done that, so they have rising taxes, or they're afraid the country will be forced to leave the Eurozone. By withdrawing money, they are forcing banks to scale back their lending and inadvertently make the recession even worse. But we know a lot of people in Greece are taking money out of their bank account and moving into precious metals. It's not a surprise. In the silver section of our newsletter, some strong information on silver. John Hathaway said in a silver update, when asked about silver specifically, It's like a small cap stock. There's lots of capacity in silver to absorb a fresh flow of new money coming in. So I think you could get a big, violent move upwards, especially if gold goes to new highs. I think silver would do so, hit new highs in a very short period of time. That from money manager John Hathaway. Also, John Embry from Sprott Asset Management said this week, $2,500 to $3,000 gold could send silver to $250. When asked about silver specifically, Embry replied when he was interviewed by King World News, as you know, I have been a vocal proponent of the investments when it comes to investing in silver. And on the subject of silver, when gold goes, silver is going to go further for the simple reason that it is an extended bull markets for precious metals, and the gold-silver ratio tends to fall historically. It's gotten down to as low as 10 or 15 to 1. It's currently 53 to 1, so consequently, silver has all sorts of room on the upside. For instance, $2,500 to $3,000 gold, that would underwrite $250 silver. Think about it. That's 8 times where silver is trading today. And I agree with you, Harold. You were talking about it. This period in time that we see right now reminds me of the summer a couple years ago when silver was at $17 and it ended the year at 31. And this really, last year, a couple years ago, really reminds me of a similar setup. I really believe that silver and gold are set to fly. It would not surprise me at all. In 2012, 2013, we have a major run in these markets due to what's happening in the world. And we have about 2 minutes left here in this segment.
Well, again, I certainly think that's going to happen also. Again, it's like a spring that's coiled that's getting ready to pop. And again, right now, everything is tied into the dollar. As goes the dollar, so does the metals at this point. When they start to work things out in Europe, I think everything is going to be fine. You're going to see the U.S. dollar resume and come down into the low 72 areas, which will push gold above 2,200. So, again, I'm very bullish on the metals for the simple reason that, again, I believe wholly that the dollar is going to continue to fall and inflation is going to be the major situation over the next 5 years. That's why you need to be in hard assets.
The telephone number to speak with Worldwide Precious Metals, let them earn your business. They have been investing in this market, helping individual investors with precious metals investment accounts for over 10 years, the entire time of this bull run. They're not Johnny-come-latelys. Give them a chance to earn your business. 1-866-623-2002. Their website is wwpmc.com, and speak with them about how they have reduced their commissions for the rest of the year from 5 to 2%. It's going to give you a chance to get involved in the market if you already have a precious metals investment account or start one before the end of the year. Speak with them come Monday morning, 1-866-623-2002, wwpmc.com. Exciting week for diamonds. There were some auctions that took place, and we have another auction to speak of our own. Harold has another auction on Monday. We'll talk about it as a World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December the 9th, 2011. At approximately 9:04 Mountain, 11:04 Eastern, radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. All the shows are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. If you ever miss a radio show, would like to go back and hear it again, go to those websites. To invest in precious metals, the telephone number 1-866-623-2002. The only company Harold recommends you deal with is Worldwide Precious Metals, wwpmc.com, their website. Harold's website for diamonds is rarecoloreddiamonds.com. The featured diamond this week is an extremely rare 4.74 radiant cut, fancy intense yellow internally flawless diamond. Large diamonds of this caliber are in huge demand and are amazing investments. And we have the video of it on Harold's website in the featured diamond section. Go to rarecoloreddiamonds.com. Get the newsletter this week from Harold, the diamond section. We have a great article, and it's quite long. The long-term future for diamonds is bright. That is a must-read. We also have some auction results from Christie's Hong Kong Magnificent Jewels Sale. They had a fantastic sale. Also, Christie's London Important Jewel Sale. We have auction results that you can take a look at. Speak with Harold. His telephone number, 1-800-432-1022, 1-800-432-1022, or connect with him at rarecoloreddiamonds.com. And Harold, exciting news. As you mentioned at the seminar a few weeks ago, we have another auction, HS Fine Auctions, with its second auction coming up on Monday.
You bet. Very, very excited about it, Randy. You go to hsfineauctions.com. You've got to sign in and register. It's going to be an amazing auction. It's on Monday, this Monday coming on the 12th. And basically, it starts at 7 o'clock Eastern p.m., 7 o'clock p.m. Eastern time, 5 o'clock Mountain time. Just going to be an amazing auction. I've got a 1 kilo silver coin that is absolutely phenomenal, over 32 troy ounces of pure silver, but this coin has got a diamond in the eye. It's the year of the pig, and again, it's an amazing piece that's going up for auction. On top of that, we have a phenomenal platinum set, 5-coin platinum set, that's from my personal collection. That's going up. There's going to be some amazing jewelry, an emerald, a ruby, and a sapphire. I believe the ruby is in a Cartier ring. That's coming up for sale. There's going to be some Argyle pink diamonds, maybe 5 or 6 Argyle pinks that are coming up for sale, and I believe there's a very rare yellow-orange diamond coming up for sale also. So make sure that you sign in and register. Again, we're just loading up the catalog over the weekend, so pay attention to the catalog. Go to hsfineauctions.com. Hopefully by the end of Friday, everything will be up, and you'll be able to view what's coming on the auction site. And again, we're the only company in the world that has this, and it's the benefit for our clients. Basically, I built this starting 2 years ago as an exit strategy to build a secondary market for my clients to resell their diamonds. Well, the last auction that we did, we sold 5 pink diamonds, so we proved to the world that we can resell diamonds at auction, and this is a live auction. You literally will go to the website at 7 o'clock Eastern, 5 o'clock Mountain. Once you've signed in, you have to sign in order to even view it. You don't have to bid if you don't want to, but there's over 300 people that have signed up for this auction, so it's going to be very, very exciting. And you're going to get the opportunity to bid on some amazing pieces at fantastic prices. So you definitely want to participate, because you definitely need to be in the diamond market and the high-end collectible market at this point. So again, it's Monday the 12th. Tune in at 7 o'clock Eastern time, 5 o'clock Mountain time. Make sure you sign in first, and you're going to get to see some of the most beautiful diamonds, emeralds, rubies, sapphires, gold and silver pieces, a beautiful platinum piece. You're going to absolutely love it. It couldn't be at a more important time than now. Again, with all the confusion that's going on in Europe and in the United States and the Middle East, all of this points towards extremely high inflation and extreme uncertainty in the financial markets. We could see currencies that have been here for forever that will be gone. We can see countries that go back to their old currencies when the euro fails. The U.S. dollar's in big trouble. So we've got all these situations happening, and there's very, very few investments that will get you through these troubled times. We know that gold and silver are a great hedge against inflation, but again, gold and silver are also priced in U.S. dollars. Diamonds, as an example, is an asset that responds extremely well to inflation, as well as gold and silver does. There's very little risk to it because they have never, ever dropped in price. And during times of high inflation, colored diamonds have gone up 500% in 1979 and 80. So never, ever has there been a more important time than to put some of your hard-earned money and your safe money into rare-colored diamonds. They never, ever fall in price, and we recommend 2 different types of diamonds. Even though we carry the rarest diamonds in the world in red diamonds, we carry blue and green and orange and purple diamonds. However, the diamonds that we are recommending to deal with inflation and currency devaluations are the yellow flawless diamonds and the Argyle pink diamonds. These are the diamonds that will respond best to the present situations and not only give us an opportunity to protect our money, but give us an opportunity to profit tremendously, as these assets will respond to exactly the market conditions that we're confronted with at this point. Let's start with the yellow flawless diamonds. they have to be flawless, first of all, internally flawless, in order for them to have the track record that these diamonds have had going all the way back to 1980, when in 1980 we had double-digit inflation, 20% interest rates, extremely high oil prices, and colored diamonds went up 500% in 2 years. We're confronted with almost identical situations, meaning that a diamond that you can buy today for $20,000 can be a $100,000 diamond in the next 5 years if we have the same market conditions as we had back in 79 and 80, and I personally don't see any way that we're not going to have that. So again, we have to invest different now than we did back in the 90s when the stock markets were strong and the U.S. dollar was strong and the overall economy was good. We've got the exact opposite scenario going on right now. That's why stocks and U.S. dollars are not the right investment right now. That's why gold and diamonds are the best investment right now. When I say gold, I mean precious metals as in gold and silver. The thing about the yellow flawless diamond market, it's a tiny little market. Maybe there's 100 of these diamonds available and cut in a year, and we sell 80% of those. Most of those diamonds are sitting in the hands of my Canadian clients and myself that have them as a hedge against inflation. Again, a hedge against the currency markets going sour and just for safe money. Because, again, for retirement-wise, if you have your money sitting in the stock market, you're going to lose your money. You're not going to be able to retire comfortably because every market has its time, and now is not the time to be gambling in the mutual fund and stock markets. It's the time to be putting away safe money and hedges against inflation. That's where you're going to protect what you have and literally make enough money to compensate for inflation and a little bit more. So what we anticipate is that the price of these yellow flawless diamonds will continue to climb and climb and climb. They never, ever decline in value because there's so few of them available. Again, last year there was basically 100 of them for the entire world, and 80% of them ended up with my clients in Canada. So it's one of the best investments you can make, one of the safest investments you can make. Even without the inflationary markets hitting, these yellow flawless diamonds go up by 25% a year. On top of that, they double every 4 years in value. So my clients that have bought them for retirement, a $20,000 diamond today is an $80,000 diamond in 8 years from now. However, with the inflation that is coming and the world financial markets in total disarray, what I believe is going to happen in the next 5 years, we're going to see interest rates stay low, almost at zero in the U.S., but in year 3, 4, and 5, we'll start to see the Federal Reserve start to raise interest rates in the U.S., which will cause a massive rally in inflation and cause interest rates to go up. Your diamonds can go from $20,000 to $100,000 within that 5-year period, and interest rates could go back up to 15 or 20% like they did back in 1980. So basically, if you cashed out of a diamond that you actually paid $20,000 for, sold it for $100, and put that money in the bank at 20%, you're looking at getting $20,000 a year back on interest on your money. And that's what we believe is going to happen with gold and with diamonds, that we're going to get a very strong rally for the next 5 years, and then interest rates will be high enough that we'll be able to put our money safely in the bank and make a decent return on our money without any risk. You want to own yellow flawless diamonds. The other thing is again, that the currency markets are so frightening that it's the only currency it's the only asset that could be sold in another currency if you need it to be. So we've also proven on our last auction that we're the only company that can resell your diamonds for you. It's taken me 2 years and a tremendous amount of money, along with my friends at Relentless Technologies in Vancouver, to build the only live auction website that's real time. So when you attend this auction next Monday, you're going to see something that has never, ever been done before. And basically, it's not like an eBay site or like a Rappaport or any of these boring sites. It's myself selling every single product. And last auction, we sold 5 pink diamonds, which has never, ever been done before, proving that we're the only company that can resell your diamonds for you when the time is right, which should give you a tremendous feeling of satisfaction knowing that you can comfortably invest in the diamond market and have a secondary market to resell your diamonds in at much higher prices. The other diamonds that you want to look at very strongly are Argyle pink diamonds. We all know that 95% of the world's pink diamonds come from the Argyle mine, and it's going to close soon. I believe it's going to close by around 2016, which is only 4 years from now. Give it 2 years for these pink diamonds to run out, and we believe that we'll see a repeat of what happened in 2005 when these diamonds go up 5 to 10 times what you paid for them. In fact, we saw it with blue diamonds when a famous mine in South Africa closed in 2005, and blue diamonds went from 200,000 to 1.4 million in 3 years. We anticipate very similar moves coming in the pink diamond market. Now, I sell most of the pink diamonds in the world, actually. I probably sell more than half of them myself, and all of those are to our clients. These are very safe and beautiful assets that at auction do tremendously well, and all 5 pink diamonds that came up for auction a couple weeks ago sold. So they're in tremendous demand, and the fact is that these diamonds could literally take care of your retirement for you, because if you bought a pink diamond today at the prices that we're at, and we get a move of 8 to 10 times over the next 5 to 10 years, which we believe will happen again, then these diamonds are going to give you the maximum return on your invested dollar. So again, at this particular point, this is not the 90s anymore when you could have thrown a dart against the Wall Street Journal or one of the financial pages and picked a stock that was going to split and double. These are times when countries are going under, when currencies are going under, where we're looking at massive, and I mean massive inflation. And if you don't have the investments that will get you through these difficult times, you're going to be the same as everybody else, with no money and struggling to stay ahead of inflation. There's no doubt that if there's inflation at 9% in China and India, that it's coming here too. The only reason that we're not seeing the numbers is primarily because the U.S. government is hiding them. They don't want to have to deal with high inflation when they're trying for a real estate and jobs recovery, which is just not happening. So again, these are extremely important times. We need to do the right thing, because one wrong move can be tremendously detrimental to your financial health. And if you believe that inflation is one of the biggest problems that we're confronting going forward, then you need to be in the hard asset market, because history proves that that's where you need to be. So again, if you're a client of mine, of Rare Colored Diamonds, this auction site that we built is for you. We only built this auction site for my clients, not for people that are buying diamonds from outside companies. And primarily the reason that I'm saying that is that I actually guarantee every product and every item that is sold on my auction site. And I will not guarantee items from other dealers that I don't know that are buying inferior diamonds. So all I care about is that my Canadian clients do extremely well, and that's why we built the auction site. The first auction, we made history, and it was a tremendous, tremendous success, and this auction will be the same. The first auction we did only had 50 people because we barely announced it. This next auction could have 200 to 300, and this site is so sophisticated that it will hold up to 5,000 bidders, and it's just an amazing thing. So again, all in all, we are going to have an auction on Monday at 7 o'clock Eastern, 5 o'clock Mountain. You definitely need to sign in order to participate or even to watch it. Watch over the weekend as we load up the catalog with our 1 kilo silver coin that's going to be auctioned off, our 5-piece platinum set that is so valuable that you very seldom have seen anything like it. Then we've got emeralds, rubies, and sapphires, and pink and yellow diamonds. So this is going to be extreme. There's going to be some fantastic deals because it's a new business just getting started. So tune into the auction and look at the Rare Colored Diamond site this week. That 474 Radiant Cut Fancy Intense Yellow Flawless is one of the most beautiful diamonds you'll ever see, one of the best investments, and is bordering on vivid. So on a color range from 1 to 10, it's a 10 out of 10. It's one of the best diamonds I've got, and you will do tremendously well with it. It's on a first-come, first-served basis.
So the auction is Monday, this Monday, December the 12th. And if you don't want to bid, you can still sign in and be a viewer. You can watch what is going on. And as Harold said, up to 5,000 people can take part. Go to hsfineauctions.com and sign up today. Take a look at the calendar of different items that he has. Check out Harold's website, rarecoloreddiamonds.com, the featured diamond of the week. Speak with him about that. It's a beautiful yellow, internally flawless diamond, 4.74 Radiant Cut, Fancy Intense Yellow. and get the newsletter from Herald, the Diamond section. This article on the future of diamonds is outstanding. They say right in there, Petra Diamonds gave a presentation predicting that worldwide diamond production will remain flat until 2017 against a backdrop of growing demand. A significant gap between supply and demand will emerge. It believes many of the world's major diamond mines are in decline, yet no major sites have been discovered since the 90s. As well, we have those auction results from Christie's Hong Kong Magnificent Jewel Sale, also out of London, their London Important Jewel Sale. You can take a look at those auction results. There's one article that is another must-read, and it was from Reuters. Diamond demand to outpace supply growth to 2020, according to Bain & Company. Chinese and Indian appetite for diamonds will fuel demand growth of more than 6% a year over the next decade and almost double the size of the market, far outpacing supply increases limited by a lack of new mines, Bain & Company said in a report. That is a must-read as well. Harold, the news regarding diamonds is just simply exciting when you see a story, long-term future for diamonds bright. And then you have diamond demand to outpace supply for the next, here we are, 12 years, 8 years up till 2020. And that market is going to double based on growth. It's an amazing, exciting opportunity to be involved in this market.
I'm so pleased. Again, the reason that I brought it up, I've been in the investment business for 35 years, and I've seen most of the scenarios that we're going through at this particular point, so I have experience trading them. That's why, in many cases, our predictions have been so accurate. But it was only 6 or 7 years ago that I brought to the attention of our radio listeners the diamond market, the rare color diamond market, and that was because I've been through it back in 1979 and 80, and I saw what the market did during times of high inflation. And once I was convinced that we're going through an almost identical period again, it only made sense to bring this again to the forefront, but again, to be able to do it in a manner that my clients were going to be able to profit from it tremendously, and that's, again, what we set out to do, and that's what's happening at this point. The prices of colored diamonds are going up tremendously. There's going to be another large price increase in colored diamonds going into next year. So now is the time to get them because, again, these diamonds go up by at least 25% a year, but there are certain diamonds that have actually gone up 50 to 100% from last year, and in most cases, the vivid pink argyles have gone up in some cases 50 to 100% from last year. They're very, very difficult to get. They're the best color that you can possibly get. I just got 3 or 4 of them because we bought out the production from Argyle for the last 2 quarters. These are brand new diamonds that have never, ever been seen before. And again, these are diamonds of an extremely high level, but again, these are diamonds that are almost doubling on a yearly basis and should continue to do that going forward. So talk to me personally. Again, I will speak to each and every client that calls. So, as I said at the seminar, and I stayed behind. The seminar was over, by 8:30, 9 o'clock. I stayed till 11:30 to speak to every single person that was there. So, again, nothing is more important than if you need my time and you need my opinions or that on what you're personally doing, I'm here for you. If you've been listening to our radio show, and again, you need to speak to me personally, I'm here for you, and that's what we do. So all you need to do is either call the office or email or ask for certain information, and we will definitely get back to you and spend as much time with you as you need in order to help you make an intelligent business decision. Because let's face it, times are extremely concerning, very confusing and dangerous, and if you make one wrong move, you could lose most of your money. We want to make certain, after 10 years of doing this radio show and making certain that we give strong, conservative advice to our listeners, we want to make certain that we get through these difficult times, and there's nothing wrong with making some money if we're right about it.
The auction is Monday, December the 12th, hsfineauctions.com. Take part in the auction on Monday. To invest in precious metals, the telephone number 1-866-623-2002. The company Harold recommends that you use, he has 100% confidence in. They gave a presentation at the seminar we had at West Edmonton Mall, Fantasyland Hotel. Worldwide Precious Metals, their website, wwpmc.com. The telephone number is 1-866-623-2002. And worldwide, they can help you start your own precious metals investment account, and they have lowered the cost to do it. 5% buy commission is reduced to 2% for the rest of the year. Silver, they believe, is on sale and will take off in 2012, 2013. So you have an opportunity to start your own precious metals investment account and do it at a reduced rate. Speak with Worldwide by calling them at 1-866-623-2002. The website, wwpmc.com. Jim Sinclair said, this week I buy the dips. He's talking about gold now, because I'm certain that $2,000 gold is coming into view. Why the financial system is imploding and what to do. This is another article that Jim had. We have it in our newsletter. He says, fundamentally, we're locked and loaded to go to 2000. Technically, this chop, meaning up and down in the market, is going to end real soon, and we're going to get direction. And that direction, in my opinion, is not going to be to the downside, but rather to the upside. Also this week, and this does not surprise me at all, there was a new report that confirmed gold is an excellent portfolio diversifier. New research confirms gold's unique role as a diversifier and foundation asset in the portfolios of euro-based investors, actually really any investor, especially at a time of heightened currency and investment risk. Also, Mike Coseras came out with an article. It's in the newsletter. For 9 years, gold has yielded 8.5% annually after inflation. And Harold, with the stock markets the way they are, you're really not going anywhere for years and years and years. Getting 8.5% after inflation is a phenomenal number. We have about 3 minutes left here in our segment.
You bet. Again, you need to study history in order to understand what we need to do going forward. And again, you need to understand inflation, and inflation is definitely coming with two major areas. One, extremely weak currencies that don't buy as much, and number two, extremely high commodities that are out of the touch of most people. When oil prices get up to $2 to $2.50, it's going to cripple the economy, but it's going to bring on massive inflation. The only answer to that is gold, silver, and diamonds. Those are the only assets that will comfortably move up and give you that hedge against inflation that you need. So again, we appreciate listening to the radio show. We appreciated 800 people showing up to our seminar in Edmonton. Again, we do this all for you because we want our listeners to the show that have been dedicated to us for all these years to not make a mistake going forward and get through these extremely difficult times. So again, Monday is our auction. Please tune in for that. Get the newsletter. We also are offering a free DVD of the seminar we did in Edmonton, and I will be coming to Toronto in the springtime to do a similar seminar that we did in Edmonton. I want to wish everybody a wonderful weekend and a very profitable day.
Speak with Harold about investing in diamonds. RareColoredDiamonds.com, RareColoredDiamonds.com. Take a look at the featured diamond of the week. Also, this Monday, December the 12th, there's an auction at HS Fine Auctions. Go take a look at the catalog. Some amazing items up for auction. You can be a part of it. You don't have to be a bidder. You can sit in and watch. It's this Monday. Go to hsfineauctions.com and sign up. Two things I wanted to touch on before the end of the show. It was interesting. Both of these guys were interviewed on Bloomberg and CNBC. Mark Faber came out this week and said he has a very special stock tip. When asked whether to own dollars or euros, he responded, I have a very special stock tip for you. The symbol is GOLD. Also, Jim Rogers was interviewed on Bloomberg and CNBC. He's still very, very bullish on precious metals, in particular silver. And you can see those interviews in our newsletter. Get our newsletter. The telephone number, 1-866-623-2002, wwpmc.com, the website, and Worldwide will be happy to send it out to you free of charge via email every week. And don't forget, connect with Harold at RareColoredDiamonds.com. Get the diamond section of the newsletter. It's explosive this week. And take part in that auction on Monday. This is a must-see auction. You must be involved in this. You'll be part of history. The second auction that Harold has had, the first one was amazing. This one should be phenomenal as we lead up to Christmas. The telephone number to invest in precious metals, 1-866-623-2002, wwpmc.com, rarecoloreddiamonds.com. The telephone number to speak with Harold about diamonds, 1-800-432-1022 or hsfineauctions.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.